Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. We're going to take a little bit of a turn today and talk about something different. We're going to talk about if you have an internet connection, if you are even remotely aware of what's going on with the internet and the world right now. Everybody's talking about this. I just can't even explain how many people are talking about AMC stock right now. I can't even explain how many people haven't spoken to high school, which is a while back now, talking about the AMC short squeeze, talking about buying AMC stock, wondering whether or not it's too late to buy AMC stock, wondering whether or not they should be buying more AMC stock. So today, we're going to talk about AMC stock. It's going to be a little bit different today. We'll get into a little bit of the sectors and how the market traded yesterday and the weird way that the market traded yesterday. But I want to be clear. First, let me put this up because this is very important relative to what we're going to talk about today. All right, so I'm going to say something that might shock you a little bit right now, which is how to make a lot of money with zero risk. And I know that sounds crazy. It's not something I would normally say, but it's how really, really big traders make really, really big money. And it's actually a part of something that was taught in this book. I'll show you what the title is in a second. And I don't say that lightly. I want to make it clear. I'm not talking about the initial trade. I'm talking about after you have profits on a trade. So if you can imagine you bought a stock here, and let's use AMC stock. You buy the stock here, which last week was actually early this week. It was $12, 12 and change. And then it started to rally, and we called the buy stop at $14.50. We had 20 as our first initial profit target. So let's say you bought $14.50, just for argument's sake. We talked about it on Monday. So when you look to buy that stock, the original time you're looking to buy AMC stock, you purchase it, and then at some point, if you're smart, you have a stop loss. When you have a stop loss, that means that you're risking X amount of dollars in exchange for the reward potential. That's the first part. Now, the second part is, since you're accepting losing money in exchange for a gain, that's the first reason we get into a trade. That's the downside. That's where everybody says you need to be disciplined. If that thing moves against you, you get out. But nobody talks about what happens if it moves in your favor and what do you do. So what we're going to discuss today are profit-taking strategies for AMC stock. But I'm going to say it again because it's kind of a bold statement. I'm going to say it again. How to make much bigger money risking nothing. So if I asked you right now, you put on a trade this week, and let's say we did it on Monday, and now it's Friday. Let's go back in the time machine and come back to Friday and say, you're going to put on one trade this week, and after the first day that you get in, you have a choice. You're going to make zero, or you're going to make $30 on that stock. Would you be okay with that? You'd lose zero, but you'd make 30. Would you be okay on that? And I think that most people would say, heck yeah, sign me up, right? Who would want to not be in a position to lose zero and make $30? So I'm not going to put a dollar amount, like make 10,000. I'm not going to say any of that crap. That's how big traders, and that's what was taught in this book. And by the way, these traders made billions of dollars with what I'm about to show you. It really comes down to this. You risked, you were willing to accept your account to go negative on the initial part of any trade, but we're talking about AMC stock right now when you bought AMC stock. Now it's moved up in your favor. And I'll give you an example of the amount of people that are calling right now. I have a friend who lives down here in Florida and knows nothing about the stock market, has doubled her money this week. Doubled in 2 days, wondering whether that's good. What? So we're going to get into the reason I'm bringing this up is because there's a lot of people in the trade right now that I know of that have no idea what to do with it now. And if you don't have a plan, you're going to get steamrolled if this turns around. But that's the downside, right? That's if it turns around. But what if it doesn't? What if it keeps going in that direction? Well, you need a line in the sand. You need a way to read the tape. You need a way to determine whether or not the trade is still valid within the time frame that you're trading AMC stock, whenever you bought AMC stock. So the bottom line is this: you risked, moved in your favor. Now you have a decision to make. Are you willing to let that stock come back to where you bought it in exchange for a much bigger move? That's how you risk nothing in exchange for a bigger move. So we talk about this book here again. I don't know if you can see it. It's called The Complete Turtle Trader by Michael Covell. The turtles, if you ever saw the movie Trading Places with Dan Aykroyd and Eddie Murphy, the story is whether or not a trader can be taught or if it's natural born. The turtles actually came out. It's actually a true story. They came out in I think it was 1983, actually, the year I graduated high school. And they hired 14 people, I believe it was, somewhere in that area. And their entire strategy was buying 20 and 55-day breakouts. And that's it in commodities. That was the entire strategy. The hard part was nobody could follow it. And here's why. Well, I shouldn't say nobody. A lot of people washed out, and this is all getting back to AMC stock. It's a lot of people washed out because they bought commodities, actually, moved in their favor, and they had certain ways of pyramiding and adding into the trade. The goal of the trade, though, was not to make pennies. The goal of the trade was to make dollars, and big dollars. So what happened was, mentally, a lot of people who they hired couldn't handle what's known as a drawdown. So a drawdown is essentially when you have a dollar amount and you see that dollar amount in the trade go down. Sometimes the drawdown is on a losing trade, but what they couldn't handle was a drawdown on a winning trade. Which, think about it, you see this trade, and let's take AMC as an example. Let's say you bought 2,000 shares at $14.50 where we discussed a couple of days ago, and the stock went up to 30 yesterday. So let's just say $29.50 just to keep the math simple, right? So now you're up $15 on that trade, on a 2,000 share trade. That means you're up $30,000 in 2 days. Okay, let that sink in for a second, right? So now you're up $30,000, and your entire year at your job, you make maybe 80. So in 2 days, you just made a third of what you make in a year. And now you're watching the stock, and now it's fluctuating, and now it goes from $29.50 to $28 to $27.50, and now you're watching that profitable trade go down. You're watching it go down. You're watching it go down. You're like, oh my God, what is going on here? And you're seeing the paper profit. But that's normal fluctuations in the market. So when the market goes up, it pulls back. When the market goes up, it pulls back. But what happened was the turtle traders that washed out couldn't handle the profitable drawdowns, and they would get out of winning trades and book those profits and not allow the trade to move out. So like I said, the strategy was buying these breakouts, and then on the opposite side to the downside was the same thing on the exit side, which is a big move to the downside, and they couldn't mentally handle giving profits back. But that was how the other traders who could hold those trades made billions with a B. So I'm going to go back to what I said before. Please take what I'm saying in context. When I say make a lot of money in exchange for risking zero, what I'm talking about is risking back to the spot that you bought the stock. That's what I'm talking about. Now, you don't necessarily have to let it come all the way back, but it's the extreme of letting the trade come all the way back. So you need a line in the sand, the way the turtle traders did, where either a 10-day breakdown or a 20-day breakdown, I believe it was 20 and 55, if I'm not mistaken, where if it pulled back to the new low of the last 10 days, they would get out. If it pulled back to the last 55 days, they would actually get out and reverse the position. It was that simple. But mentally, they couldn't handle, the traders who washed out couldn't handle it. So what does that have to do with AMC stock right now? It has everything to do with AMC stock. Because if you've never traded before, or even if you have, even if you are in AMC stock and you're enjoying this, let's pull it up again. If you're enjoying this right now, but you have zero idea what to do, you need a line in the sand. So we're going to go over to the charts and we're going to take a look and talk about exactly what I mean. So here's where we are now. It's obviously what's known as a parabolic move where it's just exploded. So what do you do? Well, if you're at your job, the minimum is to have a trailing stop loss somewhere in here that is either a dollar amount. And again, I'm going to come back on the screen. It's a dollar amount that you want to walk away with. So again, we'll use $14.50, and if it starts to pull back, you could say I want to get out if it gets down to $25, whatever number you want to say. You could use what's known as a trailing stop, where So what I just gave you is a stop loss. A trailing stop is you could get out if the stock pulls back $2, get me out. Another type of trailing stop is a percentage trailing stop. We say wherever the high peak is when the market opens today, sell it for me if it pulls back 3%. You need to have this in place. Now, if you want to have a wider window where you might have bought at $14.50 and now it's up to right now pre-market is trading at $29.25. $20 was the big breakout level. So now if you want to have the stock breathe, you want to not get known as what's shaken out, $20 would be your line in the sand. Again, this is educational purposes. Everybody make your own decisions. But to let it breathe, to have the turtles in mind, to let that drawdown of profits come back where it's still well above where you got in, but you're letting the stock breathe for the next move. You're not going to get taken out what's in trading, taken out by what we call one of those big FU candles. You can figure out what FU means. And comes back down, spikes down, and then does exactly what you thought. So you need to plan right now before the market opens, before you go to work, before you're deciding what to do. Are you watching it on a 5-minute chart as a day trader? How are you deciding to get out? What levels? What key levels? Not one individual chart, what key levels? If you're trading it as a swing trader, you're an active trader, maybe you want to look at it on the hourly chart and say, when the hourly chart makes a new 5-candle low, that's what you'll get out. If you're watching it on the daily chart, not sure if you want to risk yesterday's candlestick because it was below 18, which is below that support level that everybody's watching. But you need to prepare. So when you're watching AMC squeeze, short squeeze, you bought AMC stock, you're still not sure what to do. It's imperative right now that you keep the context in mind. This is real money for you if you happen to bought at lower prices. If you bought it at $14.50, don't listen to all the garbage on the internet. Sure, the stock could go to wherever. I'm not even going to throw a number out there. Whatever the stock does, you need to take personal responsibility for managing your own money and stop paying attention to message boards of probably 19-year-old kids who have never traded before, quite honestly, giving you advice. I just gave you some ideas for trailing stop losses. I gave you the extreme all the way back down to $20, which is giving it $9 breathing room. So remember what they said here, that it's the drawdowns in exchange for the next big move that creates small fortunes. So you need to decide, do you want to walk away with a certain dollar amount? Do you want to let it fluctuate for a certain dollar amount, meaning 29 to let's say 25 as a stop loss? Do you want to let it come down a certain percentage? So if it goes up to 30, sell when it comes down 5% and just keep trailing. That's the thing too, though. Keep trailing it as it goes up. So if it goes from 30 to 35, it resets at 35 and then it's 5% from that 35. Or do you want to use that much, much wider window, which is still above your entry price at $20 in exchange for letting the stock breathe? But here's the big thing. Whatever you decide to do, take responsibility for it, because if this is something you've never done before and you're getting caught up in the hype, plan for what you want to do now so you can script it so that when all is said and done, you're the one hitting the buy or sell button. I just can't stress that enough. I'm going to end with a quote here today that we talk about all the time, which is, we need to know what's probably going to happen next, but know what we're definitely going to do when we're stock traders and we're in the stock market. So if you've never traded before and you're caught up in this hype, pause this video, watch it a few times, forward it to your friends. You need to know what you're going to do before you need to do it, because then if you don't, it becomes an emotional decision and you're going to be a wreck. How do I know that? Because I went through that when I first started trading. So watch this video a couple of times. I gave a couple of definitions. This book is called The Turtle Trader by Michael Covell, if you want to pick it up for yourself on Amazon. And again, we're looking at a 3-day weekend this week. Hope you get some time to recharge. You know that it's some nice weather down here in Florida. Looking forward to having a barbecue. If you have any questions, absolutely leave them below the video. If you could please do me a favor, click down and subscribe. That would mean the world to me. Also, click the alert button. That would mean that you get when new videos gets popped out. And I just want to talk briefly about yesterday's video about yesterday's market. It was a weird market. The indices themselves were kind of choppy. But then at the end of the day, it was like stocks were actually performing better than the actual indices, which was kind of a weird day. We put on a couple of new swing trades yesterday. We talked about Workhorse yesterday, or buy stop triggered in Workhorse yesterday. So we're riding that one. We actually had a trade in a couple of financial stock yesterday. So we're long. It looks like we're going to get a good open. But remember what I said. Know what you need to do before you need to do it, especially in the hysteria that's going on right now. Have a great day, everybody. Have an awesome weekend. Give us a thumbs up. Smash that thumbs up button. And give us a subscribe. I'd really appreciate it. If you have questions about this, definitely leave a comment below. We get back to you as soon as we can. Have a great day now.